Remember that terrifying $600 rule for Venmo, PayPal, and Cash App? Yeah, the one that 20 million Americans panic about every single transaction, from splitting dinner to selling an old couch. That nightmare, right? So it's actually been officially erased. But that's not all. Trump just signed a bill that flips the entire IRS reporting system on its head. So this isn't just good news, it's a potential game changer for freelancers, side hustlers, small business owners, and even casual app users. So if you've ever sent or received money through a payment app, you're going to want to listen closely. What I'm about to tell you could save you from the IRS headaches and possibly hundreds in taxes or penalties. So let's talk about the first thing, which is the $600 reporting rule and why it sent America into a frenzy. So here's what most people don't understand. The $600 rule wasn't just about taxing rich business owners. It was actually aimed at everyone. So those are going to be gig workers, babysitters, your cousin who sells t-shirts, even people getting reimbursed by friends. So let me break this down and tell you exactly what that rule had. So originally it was part of the American Rescue Plan, and the rule said that if you received over $600 through platforms like Venmo, PayPal, Cash App, or Zelle for goods or services, the payment processors had to issue a 1099-K form. Now that form would also be sent to the IRS, making it look like you earned business income even if it was personal. And the thresholds were supposed to drop essentially like this. So it was going to go down to 5,000 in 2024, then 2,500 in 2025, and then down to 600 in 2026. So can you imagine like selling your couch for 700 and boom, a 1099-K gets issued. You help your friend move and you get $800. Bam, the IRS is going to see that. So this rule didn't just target gig workers. It pretty much hit everyone using these digital payment apps. And here's what's really interesting. Even if it wasn't taxable, you had to prove that it wasn't. Otherwise, you would actually risk getting hit with penalties, interest, or even audits. So now we have the new rule, which pretty much changed everything. So this probably might be the most important thing I share in this video now. All right. So on July 4th, 2025, Trump signed what he called a big, beautiful relief bill. And here's the headliner. The $600 reporting threshold, that is over with. That's dead. It's gone. It's canceled. So here's what it replaces it with. So starting 2026, only if you earn over 20,000 and conduct more than 200 transactions, you will get that 1099-K. So that restores the original reporting rule from before the American Rescue Plan's expansion. So reimbursements, you got gifts, personal payments, they're excluded and will no longer trigger these red flags that's going to issue that 1099-K. So let that sink in. We just went from a $600 panic to now a $20,000 buffer. And here's why it's important to you. This isn't just a tax rule change. It helps things make things a lot more simple. All right. So the before and after, right? So what this really means for you. So let me walk you through how this change impacts you line by line. So under the new rule, let's say you receive $600 or more through apps like Venmo or PayPal, that got reported to the IRS. Even a single transaction could trigger a 1099-K form. And if it was a casual reimbursement or payment, that would get flagged. Gift and or reimbursements will also get flagged, even if they were never meant to be taxed. And now here's what's changed under the new rule. So threshold jumps from 600 to 20,000. So you must have over 200 transactions, not just one. And the casual use, the gift reimbursements, all those are going to be completely excluded. So let's break down exactly what this means for you. Ultimately, what this is going to mean, the bottom line is there's going to be less paperwork, less panic, and give you a whole lot more peace of mind when it comes to this. So What do you still need to do, right? So here's the trick, and this is going to be important. Just because the reporting rule has changed doesn't mean your actual tax obligations have, right? So the IRS still wants you to play by the rules. So that means income is going to be income. So whether or not you receive that form, you still want to make sure that you are reporting this to the IRS. So let's walk through some things that you can do to keep yourself protected and organized as it relates to this. So number one, you still want to keep detailed records. So this can't be overstated. If you're earning income through freelance work, side gigs, or even occasional sales, you still need to make sure that you're documenting everything. Don't assume that PayPal, Cash App, or even your tax software is going to sort this out for you. You are your first line of defense if there's ever an audit. All right, next, you want to make sure that you're tracking who exactly paid you, what it was for, and also you want to document how much it was, when it happened. So having a simple spreadsheet or an app like QuickBooks Self-Employed will really help you go a long way if you're getting a lot of these types of transactions. Or like I said, you could use a spreadsheet as well, like on Excel or Google Sheets. All right, second, separate your personal and your business accounts, right? So here's what most people don't understand. If you're using the same Cash App account to be able to accept payments for consulting, or you get reimbursed for pizza night, and that's all in the same account, you're literally asking for tax season headaches, right? So you want to set up a really clean separation and a break. So one payment account for business, another one for personal, right? The one change alone could really prevent misreported income and save you hours of sorting receipts and transactions later. Third, understand what's going to be considered taxable income. So let's make this crystal clear. Birthday gifts, they are not going to be considered taxable income. Reimbursement from your friends, not necessarily taxable income. Selling your couch, probably not taxable unless you are flipping furniture on a regular basis. Dog sitting for $600. Yes, okay, that's going to be considered because that is a job. All right, so if you're doing something repeatedly with the intent to earn money, it's likely going to be taxable, even without a form from PayPal or Venmo, and maybe even if you don't hit that $20,000 threshold. Fourth, you want to make sure you're reporting honestly. All right. So please understand, just because you don't get or not going to get that 1099K if you're under that $20,000 threshold doesn't mean that you don't owe taxes. Right. The 1099K is just a form, right? It's a notification, but it's not a permission slip. Right. So if you earn income and don't report it, you're exposing yourself to back taxes, penalties, interest, possibly even audits. Right. And honestly, in this case, isn't it just better just to follow the policy? It's going to be the safest thing for you to do. All right. So just to break down a couple of more examples for you. So let's say you are a freelance graphic designer. You make $300 to $400 a month designing logos on the side. Under the old rule, you would have got hit with that $600 threshold by February, and boom, that 1099K would have been mailed to you. Even that $200 that you send to your family member as a gift, right? So that's going to be flagged as income, and you have to explain to the IRS that it is not income, all right? But under the new rule now, if you're under that 20,000, have less than 200 transactions, there's not going to be a 1099K, but you still need to report that income to be able to avoid the stress of incorrect paperwork and misclassification, all right? So ultimately, what you want to do and understand is that just because you're not getting the 1099K, continue to be able to report the right and correct income, right? So why this change happened, right? Understand this, the IRS's original plan, they wanted to make sure they did not leave any income behind, and it was designed to catch underreported income and end up targeting everyday people, right? Millions of people will suddenly get treated like they're running unlicensed businesses, and even worse, people are going to get flagged and audited for birthday money and dinner reimbursement, garage sales, payment apps. We're going to be drowning in paperwork, sending all these 1099Ks to all these people who typically normally wouldn't get it. And, you know, it was a really, really big deal. And it was understandable because obviously the IRS wants to generate more revenue, try to get more money from us. But ultimately, it would have created a big logistical nightmare. And by having this new rule or this actually getting rid of the new rule of the $600 requirement, it would have made it a lot more easier for more people, right? So that is the power of being able to do. So this is really great news, especially if you're someone who is not necessarily has a business and you have to deal with this, or even if you have a business, it's going to make things a lot more simpler for you. So hopefully this was helpful. If you have any questions, let me know in the comments below, and I'll see you in the next video. Take care.